Hi, everyone, and thank you for joining us today for our webinar From Pre-Approval to Closing the Deal, Home Buying 101. My name is Kelly Blount, and I will be today's moderator. With that, we'll go ahead and get started. I'd like to turn things over to GECU's very own mortgage loan officer, Jim Steeves, to introduce himself and today's guest speaker.
Good morning. Thank you for having me, and I want to welcome all of our attendees to this webinar. We're excited to have you with us. My name is Jim Steeves. I am a mortgage loan officer here with General Electric Credit Union. I have been with the company for about 14 years and been doing mortgages for about 5 years, although I've been a member of the credit union for almost 40 years. You've got to take advantage of these wonderful benefits that a not-for-profit credit union has to offer. So again, we are so glad to have you with us. And our keynote speaker today, Lisa Lanik, we're very happy to have her with us joining as well. She is the Senior Account Manager with MGIC and is going to be helping guide us through this webinar today. Lisa, I'd like to say hello and please take it away.
Hey everyone, welcome, welcome, welcome. I am very excited to do this for everyone, especially my first-time home buyers, because I know that this process can be a little bit daunting. My name is Lisa Lanik. I am with MGIC, and MGIC is actually a mortgage insurance company that I don't know if a lot of people know this or not, but back in 1957, you had to put 20% down. Today, you do not need to put 20% down. So I think there's a lot of misnomers out there that you have to wait to put 20% down. So we're kind of going to go over today a bird's eye view of just the general basics of buying a home, like your first time especially. And so, you know, there are plenty of financial benefits of home ownership, especially when it comes to tax benefits, the appreciation in the investment of your home. There's a lot of equity that you can build within your home. It's one of those things that I feel like is the easiest way of building generational wealth, because renting is one thing, and renting serves a purpose when you need it. But at some point, when you take a monthly rent payment and you're throwing that away every month, that can go towards home ownership. So we're going to try and get you into a home, and the wonderful loan officers at GE are going to help you with that. So but first, you know, with the financial benefits of owning a home, we do have to make sure you qualify. And so today we're going to talk about credit. And so in this section, we're going to talk about credit. We're going to talk about saving and budgeting and pre-qualifying. All right, Kelly, can we go to the next screen? So today's agenda, we are going to, help get ready to buy a home, and then we're going to go through the process of buying a home and then getting your mortgage. Now, we're not going to discuss closing your home loan. That's going to be discussed with your loan officer one-on-one when you establish a relationship with someone at GE. All right, so your next slide. So getting ready to buy a home, like we discussed, there are definitely just financial benefits to it. So we discussed all of that. But so credit, one of the things we're going to talk about is credit. And credit lets you obtain something now for little or money out of pocket and pay over a specific time. Now, a lot of people have credit cards and things like that. So there are two types of credit. There's an open-ended credit, like a revolving credit card, mainly like store cards, like Visa, MasterCard. And then you have your closed-ended credit, which is like a mortgage, a car loan. It's a specific amount, or a personal loan. And once it's paid off, then that closes. You would have to get reestablished after that. Now, I do want to, if you all would just take a pen and paper and write this name down, it is the annualcreditreport.com. And the reason why I say that is there are many, many companies out there that will charge you for a credit report. And then all of a sudden you'll start seeing a monthly fee and you're thinking, how did I get signed up with that? I'm encouraging you not to go to those sites, but the annualcreditreport.com is the one site that you can get a free credit report once a year. and it's established through the usa.gov/credit/reports. So just know, and you don't have to know that, but just know that annualcreditreport.com is the one that you want to use for getting, and it will cover what loans that you currently have. It'll cover your current debt, and it will cover any, if you have a bankruptcy history to see how long that's been, and then also any lawsuits that are recorded. So just know that that's there. And then when you're getting a credit, or when you are getting established for credit, they really, especially, when you're getting a credit for a mortgage, the things that they're looking for is what your income is, the length of your employment, how long you've been lived at one residence, previous credit history, amount of outstanding debts, and then stability of your checking and savings account. So that's pretty important as well. And then also the collateral, which we're going to go into a little bit, just the appraisal of the home. Unfortunately, there is where some people learn their first real estate lesson when credit is really important, because they are shocked to find that the credit history has prevented them from getting a home. That's why I highly encourage you all to look at your credit report before you do establish a relationship with a real estate agent or a loan officer. All right, so protecting your good credit standing, late payments are always important to make sure that you're on top of. Your minimum payments is important too. That does establish your credit scoring, or one of the factors that establishes your credit scoring. You want to make sure that you're doing more than just minimum payments, and then use credit effectively, and then always ask for help. Now, I do want to also establish that when you are asking help for like maybe a credit counselor, be careful, be very, very careful not to go into a debt consolidation program, because a lot of times that is the wrong way to go. And I don't know, Jim, if you're familiar with any of your, your members that have ever done this before, but it can screw your credit. And I feel like it's almost like a snake oil salesman-y. So be sure not to go into a debt consolidation. Do you have any words that you want to say about that? Do you know of anyone that's done that?
Over the years, I've worked with both consumer lending type of loans and now more recently as a mortgage lender. So I am familiar with folks that had applied for credit cards and car loans, personal loans in the past. And if they've had issues with their credit, they have explored these types of credit counselors. Different advice has been given to them that may have negatively affected their credit. So I think the idea was that it was going to be something temporary that they were going to work back out of. But that can affect the timing, especially if you're thinking of getting pre-qualified to purchase a home and your credit has not sort of been reestablished. Yeah. So again, if you're younger and you're just getting started, you may not need to explore credit counseling advice, but you can always call, like say our credit union here, we have what we call relationship consultants, kind of like a personal banker, similar title, that are located in our branch offices that can also really sit down with you and go over some of this, these basics to help you work on your credit score and get it established. Thank you, Lisa, for mentioning that, because it's a fantastic tool that not everyone knows that we offer here at GE Credit Union.
Good, yeah. So just be careful about debt consolidations and go to GE first before you go down that road. And then also, I do want to talk about college kids real quick. I don't know if you all are familiar with Dave Ramsey. Dave Ramsey has a lot of great advice, but the one advice that I don't agree with him on is to not have a credit card, because you do have to have established credit in order to get a mortgage. So I do want to make so for instance, when my kids, one of my older son went to college, I got him a credit card that he put all his food on, and I just paid for it myself, but it helped him establish his credit. So just know that, yes, credit cards are important if used correctly. It's very important, used correctly. So just want to talk about that. And then understanding the credit report.
Lisa, I've got an extra suggestion on credit cards as well. Not everybody has someone available for, say, a cosigner as well. Another great option, and I 100% agree with you and not Dave Ramsey on that same point. A credit card doesn't have to be scary. It is a great way to get started, and you can also get what's called a secured credit card, which means you don't necessarily need to have any kind of a cosigner. You can do this on your own. So if you really are starting from square one and you do not have any credit established, you don't need to have a credit score to get the established or the secured credit card. You simply have to sort of put a hold on a small amount of your own funds, and you're basically borrowing against yourself. I would recommend this for folks that are looking to get this credit started, and at least 6 months putting that in there, and you'll start to see some good results coming from these secured cards. And once you've established credit, you can get yourself a regular type, for lack of a better term, just your standard type of credit card, and then maybe release the secured funds that you had against the secured card so you can get yourself back into it. I just wanted to throw that out there because they're, again, like Lisa said, stop in at a branch if you'd like. We can go over different options. It's not a one size fits all. And we'll be probably echoing this a lot today, that it's not a one size fits all kind of thing. Absolutely. I thank you, Lisa, for letting me to interject there.
Yes, perfect. I do like that. Okay, and then just understanding your credit report. When you do the annualcreditreport.com, it's going to pull 3 bureaus, and those bureaus are Equifax, Experian, and TransUnion. So just know that those are pretty standard, those 3. And so those are 3 bureaus, and they're also called agencies. The credit report will have your identifying information. It will have, your credit information, any public records like we discussed, and also any inquiries. So it's really important before you're buying a house not to go and do a bunch of inquiries everywhere, especially buying a new car, buying new furniture, things like that. And then let's see, and then how can I fix any errors? That is, errors can be challenging sometimes, but it's very important to work with the credit provider. Like, let's say you have a 30-day late on your credit card. If you call the credit provider, sometimes they work with you and they'll take that off of your credit report. So that's a good one. And then there is you can also fill out an online dispute form with each of your credit report agencies as well. So just know that that is also available to you. All right, so then saving and budgeting, we're going to talk about. We're just a few minutes behind, not too bad. So saving and budgeting, sticking to a budget doesn't have to hurt. I know it's a pain. I've gone through it many, many times. In fact, I'm going through it right now because I want to retire one day and I spend too much money. So I'm trying to go through and say, okay, Lisa, do you really need to go out to dinner all the time? Do you really need another dress for this event? So I do highly, highly recommend that, first-time home buyers learn to sit down, go through and identify your expenses, figure out, especially the one that gets me in trouble the most is subscriptions. So go through, write down all your expenses. If there's any subscriptions, like, for instance, I'm trying to think of something, like even iCloud, I think it's $9.99 a month, or I have YouTube Premium, which is $19.99 a month. So anything that you have a subscription, just make sure that you're using that subscription, because you think about, if you're spending $19.99 a month on something that you're not using, at the course of a 12-month period, that's $220, or like around $220 in a year's time. That's a lot of money for something that you're not using. So just go through your budget, write down all your expenses, and write things that you can cut out, especially eating out. I'm going through this with my kids right now. If you can make a quesadilla at home, make a quesadilla at home. You don't need to go to a Mexican restaurant and spend $20 on a quesadilla. So just know that these things add up over time. And then, a good budget will understand where you are spending your money. It will increase your savings in order to buy a home, and then it will prevent and reduce impulse spending. So I've had to do that myself throughout the years. But like we said, identify your expenses and then make simple logical changes. Budgeting to maintain your home, not just to buy it. So when you are saving to buy a home for the down payment, you also need to save a little bit extra. because there's always something, there's moving costs involved, there's maintenance that needs to be done within the house sometimes, like painting or carpet. So just know that saving a little bit more for your home is important to be able to handle those maintenance. And then pre-qualifying for your mortgage. I think that's the next slide, Kelly. And Jim, I'm going to ask you, you don't have to do it right now, but real quick, you know, pre-qualifying shows how much you can afford within this process to spend on a home. And then it's going to go over your income. It's going to go over your debt and savings and amongst other factors. But current interest rate is also a part of that factor, because the higher the interest rate, the more the mortgage payment's going to be, which is also going to affect your DTI, which is debt to income ratio. And that's an important number to know. And then pre-qualifying can determine your, you know, what your mortgage payment is every month to make sure that you can handle that every month. That's very important. And then how much money you'll need for a down payment and your savings goals. Now, who can help me pre-qualify? Of course, a loan officer like Jim and any of the loan officers at GE. So just know, pick up the phone, ask someone that answers the phone, hey, can I speak to a loan officer? And they will help you throughout this process. But so Jim, do you have anything else? We'll talk about documents in just a second, but as far as, you know, anything else on that one section we just talked about?
Yeah, and thank you. I typically, my go-to move, because everybody has different income that will help them qualify for this as well. So again, it's kind of a case-by-case basis. I do get quite a number of calls on occasion where somebody wants to know, hey, I want to know the maximum. And just because you may qualify for a maximum amount, you may not want to have the maximum amount. If you have pretty good salary, that can be a pretty beefy monthly mortgage payment. And this becomes part of our conversation as well with that member. You know, maybe they're driving an older car and they're planning on getting this home, and within another year or two, they're also going to plan on getting another car. So as Lisa mentioned, this debt to income ratio, yeah, we can maybe get you qualified for this larger home, but future needs, if you needed a car within a year or 18 months or 2 years, now you may not qualify for any other type of lending that might be needed. So two sides of the coin here. Number one, we definitely want to set you up for success, and we want to put you within a comfortable budget based on your individual needs. So this is part of our conversation as we go through this pre-qualification process. Thank you, Lisa, for throwing me a softball there.
Exactly. And then documents you may need to provide, just know that these are the standard documents. Tax returns are not necessarily important unless you are if you own a business, but W-2s definitely. 2 years of W-2s. Is that right? 2 years of W-2s?
Yeah.
Okay.
And then two most recent years.
Okay, so that establishes your employment history. Typically, they do like you to be on the job for 2 years. That's not mandatory, but just know that 2 years is a good rule of thumb. And then paycheck stubs, they will ask you for 30 days of paycheck stubs and statements from savings and checking accounts. All right, so now we're going to talk about buying the home. So once your financial ducks are in a row, what you can afford, it's time to start looking for a home. So in this section, we're going to cover what to look for in a home, what to expect with a real estate agent, and then making an offer. All right, so the must-have versus the nice-to-haves. Sometimes we have champagne taste and beer budget, unfortunately. And so we want what we want, but sometimes we can't afford what we want. So make a list of the must-haves, and things like, you know, neighborhood, your distance to work is important. You don't want to spend all your time in a car for 30 minutes, 60 minutes. Schools are extremely important if you're going to be having children soon, and then near shopping. So then what to consider about the home itself. You want to look at the sales price. You want to look at the size and space, and then conditions of all, like the electrical, the plumbing, the heating. Those are the kinds of things that you want to look to. We're going to get through that in a little bit when it comes to the inspection. And then what to look for in a real estate agent. I think that's the next slide. Yeah. So who helps you buy a home? A real estate agent. And there is a difference between a real estate agent as a buying agent and a selling agent. The buying agent represents you as a buyer, and the selling agent represents the homeowner. Be clear with what your expectations and criteria with the real estate agent, and they can help you along this journey. You have a team. You have a real estate agent, and you also have a loan officer at GE that can help you and guide you through this. I highly, and when I say highly, I highly recommend you use a real estate agent. I know there's a lot of things in the news that says you don't need a real estate agent. I don't know what I would have done with several of my home purchases throughout the years without a real estate agent, especially going into a new area. They do help you with the process. Who to use for a home inspection, what is it? The Ardon, what's that gas that there's a test?
Radon. Yeah.
And things like that I would have never known any of that without a real estate agent. So I cannot stress enough that it is really important to use real estate agent on that regard.
I will throw in this as well to help the market, the economy kind of is cyclical, goes through different things. And for the past few years, we've kind of been experiencing more of a seller's market. With that, what I mean is that sellers are a little bit more in the driver's seat right now. So homes are at a not in supply based on the number of buyers that are out there. And so these agents kind of have their finger on the pulse of the new homes that are getting listed. They find out about them quicker. If you don't have any representation, by the time you find out a home had even been listed for sale, it may already be pending under contract.
Right.
And it's a very frustrating process. So until the market changes more evenly or becomes more of a buyer's market where there are more homes than there are shoppers for homes, again, Lisa's absolutely correct. That agent not only will help you find a home, but they are a wealth of information on a lot of other resources to help you be successful.
Yes, and then also your loan officer is, again, part of your team on this home buying process. You can, when you do establish a relationship on figuring out what your budget is for a home price, ask the loan officer at GE to recommend you to a real estate agent, and that way you have, great representation. All right, and then making an offer, I think that's the next slide, Kelly. So my notes there said, most people don't propose on their first blind date. For some reason, it's rare and not well advised for a buyer to fall in love with the first home they view and purchase it immediately. So it is really important that you do look for several homes to figure out which one is best suited for you and your family before you make an offer. There are, like we said, there's taxes that are involved in that decision. There's school systems that are involved in that decision, the cost of utilities, quality of the community services, such as fire and the police, anything else that would affect your life once upon your home. So just know that those are really big things that go towards this big investment of yours. And then making an offer, there are contingencies that you're going to have. So contingencies could be like a home inspection. I highly recommend you get a home inspection. Now there is a cost involved to that home inspection. So you are going to have an upfront cost. It's usually what, $300 to $500, Jim?
Yeah, that's probably a good ballpark. I put it into a big picture view. Think of this major investment that you're about to make. If you're purchasing a home for $100,000, $200,000, $250,000, you want to know what you're buying. Think of it as like kicking the tires, right? The old phrase, kick the tires on the car, do a test drive. This home inspection is kind of like your test drive. They're going to pop the hood. They're going to check everything out. And it's going to be extremely thorough compared to, and I don't want to get too deep into this, but there are two different items for reviewing a home. The home inspection is optional, and the appraisal that will also be done is going to be coming later. So the home inspection is going to reveal any of these ugly things that are going to rear their ugly head. And you want to know that before you get too deep into having an appraisal done, because there could be additional fees with that as well. So a few $100s is I think well worth that small investment there to get a full report to really see what you're buying.
Yeah, they do go, there are two separate, like you have a home inspection and then you have a home appraisal. They're two separate things. The home inspection will go over central heating and air conditions, just the condition of them, the interior electrical and plumbing systems, visible insulation, ventilation systems, windows and doors. Now, don't be scared if there are a lot of items on your home inspection. Every home inspection I've ever had has a list of, it's overwhelming how many things. But your real estate agent, this is why I love my real estate agents in the past, is that they'll go, oh, that's no big deal, or that one's important. We're gonna offer less. Like, let's say the roof condition isn't great. We'll then offer less to cover that roof inspection. So just know that that's there. All right, and then
I've seen a few of these reports that are cleverly done, and they will list the items almost with a traffic light type of icon.
Oh, okay.
As green is there's no problem at all. Yellow, it's a minor concern, something to kind of look at or consider. Or red is thinking you may not want to buy this home because of this major issue.
Yep. All right, and then also within your offer that you do, you have the contingencies. You're going to have counter offers. Maybe you're going to go back and forth a little bit. There is earnest money involved. What's the percentage, Jim, usually of earnest money? Let's say, say $1,000 home.
I have really seen some strange ones lately. Some higher priced homes that only put down like $1,000, and I'm shaking my head like, okay. But a lot of times I see it maybe around 0.5%.
Okay.
Something like that, $200,000 home with $1,000 down, that kind of thing. Yeah.
Okay. And then one thing I want to discuss about the home inspection, also you need to get a separate termite inspection. That's very important. Sometimes the seller may have already a policy in place that they can transfer to you, so that may work as well. But I just wanted to remind people to get a termite inspection. All right, so now we're going to move on to getting your mortgage. I think it's the next one. Okay, so expenses during the mortgage process. Prior to close, you're going to have the earnest money like we talked about, or home inspection. There is an application. What's your application fee at GE?
We actually don't have an application fee, but we do have the appraisal fee. Yeah.
Okay. All right. And then at closing, there's going to be closing costs. Sometimes the seller can pay that, and you can use that in the negotiating, that your real estate agent and you will negotiate with the seller on paying some of those closing costs as well. So there is closing cost, and then there's 1 year of homeowner's insurance, and then an escrow that's set up regarding that. All right, and then the next one. Getting your mortgage. All right, so this is kind of like a mortgage term, PITI, which is principal, interest, taxes, and insurance. Those 4 things will make your mortgage payment. So you have, the portion of the payment that you use to reduce the loan balance, you have the interest rate, you have the taxes, the property taxes, and then you have the insurance that you have. Now, taxes and insurance, you pay with the mortgage payment, and the lender, servicer actually, will put it in an account, and then once a year pay your taxes and your insurance. All right, next screen. All right, so types of mortgage that you have are fixed rate mortgages, and you have non-fixed rates such as ARMs. So make sure you understand these terms. So Jim, I am going to let you talk about your programs that you have at GE.
Yes. So right now, exactly the way the slide lists it, our most popular programs are our 15 and 30-year fixed terms, and they've got very competitive rates. So they're worth exploring. But as personally, I actually have an ARM loan, adjustable rate mortgage. So depending on case by case, there may be these non-fixed type terms that also are advantageous. And in this case, the rate is sometimes a little bit lower on these adjustable rate mortgages. Again, the second bullet point underneath, the sub bullet point under the non-fixed there is talking about making sure you fully understand how these ARM loans work. There are many different combinations on how an ARM loan can wind up getting into its adjustable period and the variables that are involved with that. The credit union has a very straightforward program which sort of simplifies this. At least in our case, our ARM loans are always a locked rate for the beginning of the loan up until, say, 3 years. That's our shortest period. A 3-year lock before any change can start happening in the 4th year. And then if you wanted it to lock a little longer, we also offer a 5-year fix that gives you a little bit extra time locked in like that. But we can go over more of that in detail if it's something you were interested in if you did decide to apply with us. But other lenders offer different combinations of locking and adjustable periods. Sometimes it's even only interest only. And you see the disclosures and the payments seem too good to be true. And it's something you definitely want to get the full picture on before signing and getting into. Again, if it's something that you were interested in, we can go over the more detail here with applications in-house with you.
Okay. All right. Next slide. All right, down payment options. You have the initial investment in your home. Minimum is usually 3 to 5%. There is a program that is 3% down, and then there's another one that's 5%, and the FHA, I believe, is 3.5%. Now, VA, if you are a veteran, you do have some options there too at 100%, meaning that you don't have to put any money down. So just know that there are several options available that you can discuss with your loan officer. All right, so the next screen. Private mortgage insurance, that's what we do. It's like not this. Okay.
I apologize. I thought I had that turned off. That was on my side.
So private mortgage insurance is not the same as homeowners insurance. The private mortgage insurance actually protects the lender, but it does help you buy a home sooner. Because like we talked about in the beginning, my company invented the concept of mortgage insurance back in 1957, where you had to wait to put 20% down. You don't have to wait to put 20% down anymore. But if you have less than 20%, you may have to pay mortgage insurance. But that PMI can be canceled when you get to an 80% LTV, which is loan to value. All right, so the next screen. So there are home buyer rates. I just want to really quick just let you know the Fair Housing Act. It says no one may take any of the following actions based on race, color, religion, sex, handicap, marital status, or national origin. So just know that you are protected under the Fair Housing Act for those things. You do have to be a legal citizen. That is one of the, for the national origin. But as long as you're here in the country legally, then you have a right to a mortgage. And then the predatory mortgage lending typically includes excessive and unnecessary fees. So just know that that is, you know, make sure you're comparing, because there are some people that may, and highly recommend you use GE, because you're not going to be having to worry about any kind of predatory mortgage lending on that. All right.
Our only other requirement here is that you must be eligible to be a member with the credit union. I'm assuming, though, for most folks that are in this webinar, if you live or work within an enormous radius around general Cincinnati, greater Cincinnati, you're already eligible. So if you're not currently a member, we can determine very quickly if you are eligible or not, but that would be the only other thing for us specifically.
Okay. And then just the mortgage process, I think that's the next slide. During the mortgage process, the documents they need to provide, we talked about this earlier, you just need your tax returns if you're self-employed and W-2s if you're a W-2 employee, your employment history, paycheck stubs, statements from savings and checking accounts. All right, the next, you are going to fill out an application. All right, the next one. And then document the lenders provide to you is called a loan estimate. That is just a quick estimate of what is going to be required at closing. And keep in mind, it's an estimate, but they're going to get it as close to possible. And that's also going to include insurance, where they may put an estimate for insurance. It may end up being cheaper if you're working with your local insurance person. They're just giving you an estimate letter, and then they'll give you a commitment letter once the loan is approved. Anything else on that one, Jim?
No, that's great.
Okay. And then you're gonna, for the next screen, it should say process and underwriting. The loan will be reviewed by a processor. It will be sent to an underwriter for approval. They will go over the income. They'll go over your ability to pay, your credit. They'll actually look at the appraisal to make sure the appraisal is, you know, a good collateral for the credit union. And either stage, you may provide additional, they may come back and ask for some additional income. I mean, documentation. All right. Yep. So we're going to stop here, and we're going to ask, you know, I really encourage you to ask questions in the chat, because chapter 4s and chapter 5s are going to be in the book, and the book is going to be provided to you by your loan officer, but also they can discuss it with you going forward. Any questions?
All right, thank you, Lisa and Jim. As Lisa mentioned, we are going to open it up for question and answer. So if you have any questions, go ahead and submit that using your questions feature in your GoToWebinar panel. Otherwise, we will go ahead and get started. There were some that were pre-submitted. The first one asks, how can I calculate what I can really afford?
That's a good question.
That's a great question. I'll take that one, Lisa, if you'd like.
Yep.
So yeah, even kind of starting the application or reaching out by phone call, we'll start to look at some of these numbers. If you want to do something on your own, which I love that we have this just on our homepage, gecreditunion.org. If you go to our homepage, so you don't have to be a member to access that. You just go there, and under the mortgage section, kind of scrolling down through that, you'll see a variety of different mortgage calculators. And you can play around with different purchase prices and down payments and little slider bars to adjust those amounts. The only thing I would advise is that the interest rate default is just in the center, and you should probably check. We post online as well, which is kind of rare for a lot of lenders. We'll also post some generic rates about where we think they're going to be coming in currently. So you have to kind of play around with that interest rate there to adjust it where you think they currently are, or call us and we can give you a suggestion on where you should set that amount. And then you can play around with that 24/7. You know, if you're searching on a website, and I'm not endorsing this, but if you were searching on a website like a Zillow, you can see homes that are listed with their purchase prices, they're for sale, and like, oh, I like this place that is, you know, X number of dollars, and plug that number into the calculator and kind of see what a monthly payment may come to.
Yep. I'm going to really defend really quick. If you do go to Zillow or Redfin or whatever, please do not use the loan officers that are being recommended there. They just, a lot of times they are order takers. They don't know what they're doing. Please work with a GE loan officer that can help you throughout and handhold you throughout the process. I'm just throwing that out there. They're not paying me to say that, but I've gone through the process of going to like a Rocket Mortgage or whatever, and I'm like, I know more about this process than you do. they don't always know. So just FYI.
Our next question asks, does putting down more than 20% down payment result in reduced interest rate or other mortgage related benefits?
Yes and no. It does. It depends on the product or the term that you're choosing. For us specifically, with GE Credit Union specifically, we have noticed with our program, if you're going for a 15 or a 30-year fixed, I had mentioned that we also offer ARM loans. If you are doing a 15 or a 30-year fixed, we've kind of seen the rates do a bit of a drop, a tier, like a tiered pricing, where it does prefer folks hitting 25% for the down payment. And
Okay.
that's kind of where and this is a system that kind of generates some of these rate information for us. It's unfortunately unavailable through our website. It is only available if you contact the loan officer, and we can run some numbers for you. But beyond a 25% down payment, we haven't noticed any real benefit to a lower rate. Yet it still benefits you with a lower monthly payment because your loan amount would be lower.
Yes.
The next question asks, how does buying mortgage points work?
Oh, that's a good question too. I don't know if you want me to field that one. So mortgage points are going to differ between lenders as well. We do offer buying down the rates for all of our different terms, but the parameters are different between them, and there's not a magic number. I get a lot of phone calls where someone calls in and they'll say, you know, it's an automatic 1 point. Now, if you're not familiar, and who would be familiar, right? How often do you buy a house? Like, what is a point? This is a percentage based off of the amount you are borrowing, not a purchase price number. So as an example, you're buying a home for, say, $250,000. You're putting a chunky down payment of $50,000 down, and your loan amount is $200,000. So if you've got $200,000 as your loan amount and you want to pay a whole point, a point would be 1% of 200,000, or $2,000. That's 1 point of a loan amount, 200,000. You could pay a half point. Now, our system will automatically look at lower rates and what the fee would be to buy it down. It does not fit the exact formula for 1% or a half percent. It simply tells us the dollar amount. So in a way, I like it better because it's more relatable. I know if I see this and I don't have to do a calculation to figure out a percentage, it might just have some weird random amount like $630 will buy the rate down 0.25% or something like that. And this amount is also very fluid. It is not a static amount. So $630 is not going to always be the amount needed to buy down the rate 0.25%. It changes with the market changing. Again, we get into this sort of buying down points once you have found a home, you are under contract, which means the sellers have accepted your offer and you've sent it back to us, and we can start updating your application from a pre-qualification into a full application with that specific property, that collateral, the home that you want to buy. That's, again, where I like to use the phrase, where the rubber meets the road. That's where we're really gonna see what these amounts are and what's the best fit for you. Sometimes these buy down rates can be quite expensive. And a phrase that I use is called chasing the rate. And you're trying to chase a lower rate, and it's going to far exceed the costs of maybe even a regular closing costs in general. And it might be more advantageous to take a rate that's less expensive and plan on doing a refinance down the road if rates get lower, because you can always refinance. You're not stuck in this mortgage. Again, this is a conversation that we have further down the road.
I do want to mention that there is a phrase also that says marry the house and date the rate. And the reason is because
I love that.
Right now our rates, what are they, 7 something?
We're looking at about 6.75 on our 30-year fix today. If you've got, we're looking for credit scores upper 6%, upper 600, 700 credit score. The better your credit score, the better your rate will be.
So if you're looking for a home right now and you say to yourself, oh, I want to wait till rates come down. The problem with you doing that is that once rate comes down, then all of a sudden everybody's buying a home. and the price is going to keep going up and up and up. If you find a house that you love, buy it now, marry that house, and then a year or two down the road, when rates do come down enough in the 5s, 4s, I don't know that we're ever going to see 2s and 3s again, but then you can refinance. So just know that. And then one other thing I wanted to mention is in the negotiating of your home price, you can ask the seller to pay your closing costs and also maybe a point to lower your interest rate. So just know there's some negotiating room that you can work with your real estate agent that they can work with the selling agent on to help buy down that rate. So just wanted to mention that.
And again, just to emphasize what Lisa had said earlier in the presentation, this is another reason that that agent is well worth your time exploring, because they can truly assist you. That is nothing that the loan officer really assists with, that negotiation of the contract. That agent is going to be working, and think of it as Mick in the corner helping out Rocky. You're Rocky, and you're in that fight, and Mick is the one that's going to be giving you all this advice. So you want that agent helping you out. Absolutely.
Yep. All right, Kelly, anything else?
We do have a couple more questions. This next one says, are there any tax credits for first-time home buyers?
Ooh.
With the programs that we offer at GE Credit Union, we don't get too involved with the tax credits, but it's something that you may be able to explore as well. It's going to be kind of a case-by-case basis. I actually don't have a lot of information on that, unfortunately.
Okay.
And then just a few more questions. This next one says, is it easier to get approved to buy a home for married couples versus unmarried couples?
I would say it's not about being married or unmarried. It's about having a borrower alone or borrower and co-borrower. So if you have a partner with you, you do not need to be married together, but oftentimes you're stronger together because you have additional income, helps you qualify for more. One note I like to throw out here, mortgages differ from other what we call consumer loans, which are like car loans, credit cards. Mortgages, they use the lower of the two credit scores to qualify the loan. Unlike if you were getting a car loan and you didn't have any established credit and you got your friend or your parent maybe to co-sign because mom and dad or your another co-signer has got an 800 credit score and you've got a 600 credit score, that can help you on a car loan. On the mortgage side, an 800 credit score and a 600 credit score, we're going to use the 600 credit score to qualify the loan. So it doesn't necessarily help you out credit score wise, but, and I know I'm going way off course here, but having that co-borrower can definitely be a shot in the arm that can help you qualify for the purchase price that you're looking for.
But on the flip side of that, just know that if you have a borrower, let's say a spouse that has a lot of credit debt, that can be a deterrent.
Yes.
As well.
That will also populate on the credit report. So
Yep.
whatever these, that again, we go back to that DTI or that debt to income. If you've got a co-borrower that has a lot of other debts, and for our maybe potentially our younger, again, for Lisa and myself have done, I'll speak more for myself. Lisa, I'm not going to include you in this. For me, I've bought a few homes in my time, let's just say. And for me, the one thing, the younger applicants may have additional student loans and things like that. So if you've got two co-borrowers that are both young, one may have a lot of extra student loans, just depending on their specific background, what they brought to the, what they're bringing to the table. They got a great job, but they've got a huge amount of student loans that can wind up offset that income as well. So again, everything's kind of a case-by-case basis. We have to take a closer look with the application. Great question, though. Absolutely. These have all been great questions.
And then it looks like we have one more question. And Jim, I think this question is going to be for you. It's asking, can GECU assist with the purchase of a home in a new state for relocation?
We primarily work with our tri-state area, but we have programs that can work with other states as well. The key here is eligibility. So if you already say live in Illinois and you're looking to buy a home in Missouri and you're not a current member, we would have difficulty making that happen. But if you live here in Cincinnati now and you apply and maybe you open your membership to become an established member ahead of time, and then you want to buy the home in Missouri, yes, we can continue working with that application.
And when you say tri-state, you are lending in those 3 states.
We really lend pretty much across the country.
Okay.
There are a couple little wrinkles we can get into that with specific applications. But for the most part, the eligibility to start with, we want to make sure that that works. We also have folks that aren't members that live in, say, New York, and they are relocating to Cincinnati. So they're not a member yet, but they're going to be eligible because they're moving here to Ohio in Cincinnati or something like that. So we'll look into the eligibility thing. That's kind of unique for credit unions, but nothing that the applicant has to worry about. There's no cost to apply, so we can get started and take a look at some of that before you get too far into the weeds.
And then we have one more question that just came through, and this will be our last one. It's asking, is a real estate agent needed for new construction purchases?
No, it is not. That's a great question. New construction, and this would be, again, we're not endorsing, but if say you're looking to work with a Ryan Homes or Drees or Fisher or something like that, right? And they've got the little model home, and you go in and you check out the model home, you're like, man, this is great, and we love the community. You can work with that builder for getting the contract and everything put together. You can reach out to us. We can take a look at some of the numbers to see if it makes sense of going with us. And then we'll discuss different options. An agent is not necessarily needed in doing any of that. In fact, they may not have much involvement dealing with that sort of setup to purchase a home that way.
All right, and that was our last question for today. So just wanted to thank both Lisa and Jim again for taking us through today's presentation and providing a lot of great insight on how to go about purchasing a home. So that's going to conclude our Q&A session. If you do have any additional questions, feel free to reach out and we will make sure that we can continue that conversation with you. But with that, that is going to conclude today's webinar. Thank you all so much for joining us and have a great rest of your day.